G'day traders, Mindset Reset. It's Monday, the first day in a new week, new timing cycle. That's the opening range for our new week. Today I'm going to answer some questions from traders, and it's the beginning of the week, so we want to start off with the right mindset, about the right approach. And my theory, my approach, my game plan is always about waiting for the market to set up for the larger time frame template, and I've jokingly referred to them, courtesy of my friend Steven, as he calls it, the monkey hammer. The monkey hammer is an old style press in foundries, old factories, where they would lift a weight, release it, and boom, it would drop down. And the joke with the monkey hammer is, whether it's a high of day reversal, a high of week reversal, that market collapses through and is not coming back. An ACB opportunity for traders for scalable risk reward. Now, one of the things that I talk about is front side, understanding that the escalator, elevator type of activity. Front side, we can still hunt out day 3 trading setups, Thursday, Friday, Monday, Wednesday, Thursday, inside day Friday for a collapse on Monday, a parabolic elevator type of opportunity, the parabolic trade setups. We saw collapses, first red day Thursday, first red day Friday, complete follow-throughs on indexes, metals today, huge moves overnight in the London session and into the end of that window into the US Open. We saw a reversal on the NASDAQ, we saw reversals on Russell, time rotation again, the importance of understanding time. We saw opportunities on some of the cross rate pairs, the non-US dollar cross pairs, Euro Australian, the Pound Australian, just to name a few. So again, when a new week starts, we have opportunities that can be at the extremes. So we start a new week, we can be at the high of the month on new pairs. We just started a new month last week. We can be at the low of month on new pairs. But as the week now evolves, we will be expanding the range. So Friday's closing price begins that auction process. And one of the things I mentioned to somebody today is that when you have your best playbook trade setups that you're working on or that you're hunting, so instead of trying to trade all the time and catch moves, which again, my most important concept for traders that I reinforce is that if you're trading markets in the front side of the week that are on already expanding ranges, they may be reversals, we may not have the full template in place for the larger 5-star all-in opportunities, but we have session opportunities, which are still scalable, but depending on the type of setup that you're trading, it may be just a nail and bail, it may be scalable for 1 hour, 2 hour, 3 hour type of opportunity. It depends on what type of trade setup that you're hunting on the day. So Monday we have parabolic opportunities, we have other opportunities that aren't necessarily parabolic. They could be escalator in nature, but driven back into, if it's a reversal, back into that breakout, or it may be a collapse. We had parabolic collapses in the London window today, which were scalable on the backside of a move coming out of the end of last week. When we start the new week, I mentioned in the video on the weekend that often traders can get chopped up on the front side because they're chasing the extremes or they're trading on the inside and it's not a parabolic setup. We may not get a parabolic setup till day 3, if indeed the instrument that you're looking at is offering that type of opportunity. A big thing I want to suggest is to not make this a science project, as Steven says, and a lot of traders get chopped up because they're always trying to trade at the extremes in a market that could still be expanding the range. So we can be going day 1, day 2, day 3, still expanding the range. Traders are trying to counter trend that. They get chopped up because they're trading the wrong instrument. They're trading the wrong instrument for that particular setup, which comes back to building your muscle memory and understanding what templates build into a best trade setup. So often traders will try to trade a reversal in a market that's expanding the range and it doesn't go anywhere. They hold on to it, they get stopped out, or it pulls back into the range before continuing, and they don't take any profits, or they put too much size on a market it's auctioning back into them as it's working its way down before continuing the range. And then the next part of that is, if you're going to be looking for that larger template opportunity, be willing to sit on your hands. Again, several traders this morning said, I'll see you Thursday. My friend Steven, he's painting the dining room. He says that'll take him a couple days. So the monkey hammer opportunities that present over the larger time frame, the larger template, they build a template that builds into that trade opportunity. Frontside opportunities that are 3-session setups that are scalable will build out of a 3-day template. Tomorrow's day 2. Certain instruments may offer range expansion opportunities depending on the session that you're trading and the instrument that you're hunting out on the day. When you know exactly what you're looking for, there's no FOMO. There's no feeling that you need to get a trade. You need to find a trade. You need to have 5 screens open, be looking for something, because you already have your thesis in place with 1 or 2 instruments, and it either sets right up into that, as I talk about, Stephen, third hour opportunities on markets after they break out. Hour 1, hour 2, hour 3. We saw several instruments today that broke out and went hour 1, hour 2, hour 3 into the New York hour, the 9 a.m. hour, and began their reversals. Longer time frame traders outside of the range, buyers coming into the market to reverse that market on lower time frame sellers or lower level sellers. And then the willingness, if you don't see something that resonates with you, to just sit on your hands and be, as mentioned, several traders have said, I'll see you at the backside of the week. Those are easier for them to recognize, those opportunities, when they present. And when they do present, like the monkey hammer, they're scalable, and usually we get 1 or 2 of those in a week. As Stephen said, 2 to 4 of those in a month. Those are 10 and sometimes 20 to 1 opportunities. And if you have a basket of instruments that reflect that, get rid of the compulsion to feel like you need to trade all the time, that you need to master all the ABCs of trading. And as I said on Friday, master the ACBs, the ain't coming back templates that offer traders scalable opportunity. Rinse and repeat, scale it up in size. Don't need to be the smartest guy in the room. Find 1 or 2 templates. Find the instruments that are starting to set up and look like those templates. Then let those templates come to completion into your session on the day, and then execute that setup as flawlessly as possible. Lock in the money, walk away, rinse and repeat, scale them up in size. So if in doubt, my thesis always is low-hanging fruit or markets that are at extremes that blow off in Asia, because on a Monday we have markets that blew off on Pound Australian, Euro Australian, Euro Canadian, I believe, and even on these markets that may only reverse a certain range, not a monkey hammer setup. It's day 1, still zero stress, zero emotion, free cash, 3-session setup on markets that had broke out and opened in breakout on day 1 at the high of the month, high of the week, high of the day, when New York opened their session. Coiled sideways, we had space between where higher level longs were trapped in London, collapsed back to the high of the day breakout from Asia. On Euro Australian, Pound Australian went back to closing price. Euro Canadian came back into, I believe, closing price. I have to go back and check that. Indexes gave reversals. Russell, NASDAQ, both. NASDAQ made a lower high without making a lower low, squeezing into the peak formation low, coiling at the New York Open. An easy reversal for traders who traded the NASDAQ right at the New York Open. Textbook opportunity in a market that was in breakout, opening in breakout outside of the previous day's range. Keep it simple, very simple, very simple, very simple. There are certain little telltale signs on markets. Markets that are making lower lows and going lower may struggle to come back or be auctioning as they come back. Not as easy to hold on to. Take the ones that are potentially going to go parabolic. Short squeeze opportunity, NASDAQ exploded back through the lower highs. I think 100 plus pips in 15 minutes. Easy opportunity for traders. And of course, all the other markets where London opportunities were huge. So keep it simple, rinse and repeat. Front side, back side, larger time frame template opportunities. Sort of a thin news week. Keep it simple. Have a great day, traders. Great start to the week. A little bit cloudy today. It's been sunny, hot weekend. it's going to be the same templates over and over again. Your job as a trader is to find the easiest money-making trading setups, rinse and repeat, execute them, walk away. Don't make your trading a science project, as Steven says. Keep it simple and lock in the money, walk away, and get on with your day. Have a great day, traders.